we go. Live chat. Let us see who jumps in first. And get this out on Twitter, of course. Oh my god, why is my phone being so slow? Hey, Paul, good morning. How's it going? Just sharing it out on Twitter. Yeah, it is afternoon now. Yeah, most days it's afternoon here. It confuses me sometimes because, some people out on the East Coast, West Coast, we got watchers over in the United Kingdom, so it just kind of really have to, at times, think about what time of the day it is depending upon what you're doing. Kind of let all the peeps know that it's out there. I don't know what's going on, but cellular service, I'm on 5G network, so there's no reason why my phone should be acting up, but I've been noticing it, ever since this morning. It's been really, really slow. It might need a restart, the simple fix, of course. So how are you doing, man? Get any snow out there? I know we got a little bit over the weekend. So what on earth is AMC do? Okay, we're on the 5 minute there. Let's drop that back down to the 1 minute, just so we can bring today in. This is just really, really fell off today. Got to shrink it down, shrink it down a whole bunch to get that in there. PROG looking nice. PROG did pop over my average a couple times. I'm hoping to see this continue out through the week. Keep seeing it gain higher and higher levels. Go back on the 5 minute. How far back can we go there? So we punched through, ran back down a bit. We are coming back up again, but hopefully it can catch some momentum and hold that momentum rather than just pop up for a decent run and pull back. PROG's in the same boat as AMC. It's a shorted stock. It's set for a squeeze. The last squeeze it had was let me pull back just a bit here. We'll get into the excitement of crypto here in just a little bit. So was it that spike? Yeah. So the spike where it ran up to 620 per share. Hey Toad, how's it going? Greetings to those in the UK. So yeah, it had that run up, and it did spike through to 620 a share. Now, what had happened here was, at the time, I believe its short interest was 12.47%, and they went out and they actually covered. It was about between 33 to 35% of the short shares. They went out and actually covered them, and that is where the spike up to 620 came from, and then they start shorting the stock back down again. I don't have Ortex, so I don't know exactly where the short interest is right now, but it has been shorted back down. So it's primed to pop again, and it wasn't too long ago. It had the rundown before it ran down to 111. It did pop down to 127, and that was actually where I forexed my position. And so I'm sitting a lot better now. My average was in the 240 to 260, somewhere around there. I dropped my average easily by $1 a share. So now we're just kind of sitting back waiting to see, if it runs up and pops again. I would love to see, looking off of 33% of the short shares covering, it drove it up to, over $6 a share. If it did the same here, I'm potentially looking at, $5 per share profit. If it just runs up to that level, and that was only off of 33%. Imagine if 50, 60, 70% of the short shares covered. Talking with Devil's Advocate before, I view the prices, realistic prices that PROG could easily run to at $18 to $24 a share. So I'm actually looking for an 18 to 20, a good run 18 to 20. We're looking at serious volume, serious FOMO, everyone stepping in, just driving that driving that price up, shares covering. But yeah, I think 18 to 20 is realistic. I think it could even go as high as 24 a share. Hi Toad, seen you a lot in Claybro stream today. Yeah, I know. I was listening, and Claybro mentioned that Toad, Danelle, and Trapper hadn't been around much, and of course, I know Toad's been in here on my streams quite a bit. I know Trapper's popped in a couple times saying he's listening in the background. Danelle's popped in here a few times. So, but when he's got 200 people in the live stream, it is hard to catch a lot of the comments. I know I've had comments, that get missed and whatnot. So yeah, I don't know if y'all caught the title of the video. Was only there for the last 30 minutes. Yeah, I was doing a lot of stuff, most days I'm an audio participant on the channel, so I don't know how often Toad was there or how much Toad was there, but I know I did hear some Toad comments and did see at the end. So we have a bit of excitement in crypto, and I don't know if y'all saw the title of the video, the title of the live stream. Did this drive crypto higher? Now there are all sorts of technical analysis you can do, and you can look at moving averages, and you can look at all that. But the fact of the matter is, crypto is holding pretty steady, all through the weekend. Little gains here, little gains there. And last night, now it all depends on how you view these things, what you view as a possible catalyst for a move. But last night I went ahead and ran a razor across my face. If you notice, I don't have the dark mustache and the side beard. So I'm wondering, you always hear people talk. Up here we have No Shave November. Everyone walking around looking like a lumberjack. But just wondering, was the fact that I shaved part of my beard, was that a catalyst? I'm going to test it tonight. I'm going to go ahead and shave again tonight and see if crypto continues its upward movement. And if you log on tomorrow and see that crypto's continuing to run higher and higher, it is quite possible that crypto is directly affected by the length of my beard. I mean, it's one of those weird things. Don't ask me how it works. It is a quantum universe. But there it is, Movember. Not familiar with Movember. But yeah, it is possible that the crypto market reacts to the length of facial hair. It's weirder things have happened. And yeah, it's just me goofing around having fun, but when you look at it, it's a great day in crypto. I'm not looking at the place that has like thousands, all the cryptos listed, but just looking off what I've got, Doge. Let's flip over to Doge here. Doge nicely above my average. Shib jumped up above my average. It's nice to see both these two back above the averages. The other five, I don't track the averages because they're in a wallet that earns me interest. So my crypto position's constantly being added to, passively, just in the background. I don't have to touch it. But I have noticed that the wallet in general, the value is certainly a lot higher on. But yeah, and we are on the 4-hour chart on all these cryptos. So yeah, Chainlink. Nice upward movement. Not as much on Uniswap, but still upward. Ethereum looking real good. I mean, that's glorious right there. 3150. All these can just keep running. Keep running, keep making me happy. Litecoin Litecoin's looking good. Bitcoin back over 44 and still moving upward. I mean, this is crypto's looking great. We got great recoveries there. Now, on the other hand, Tesla, we're back on the 1 minute here. So Tesla is still above that the ascending support level that was built out a while ago. In fact, this was actually, I think I got to go further than that to see. Yeah. Okay, so this is built off the initial run up here that started back in May on Tesla, because Tesla was pulling back a bit. And in May, it started trending upward. It started to form a nice little upward channel. It did break through the channel when it made the run almost up to 1245. It has since been, we have seen the pullbacks. Of course, all this is a November time period. Oh, we got November 1st, was it? November 4th is where it peaked, and it kind of pulled back, moved around a bit, and then the same thing with the rest of the market. It got caught up in the huge pullback. Has bounced back and recovered, but we entered the period where Simon was cashing out on all those puts. So I'm just the ascending level of support here is just basically built off of that initial run up from last May. So that's where we got those numbers from. And looking below that, I've got this 763 level, and this was just a point that I was looking at. When it was pushing down, I was saying that if it ran down and tagged there, that would have been a buy indicator for me. That would have been a level that I would have been comfortable if it pulled back to there, possibly stepping into some shares on Tesla. But since it's never even gotten back down to that level, and it looks like it's running out to meet this ascending level of support, and we have to look and see when it hits this. Does it continue upward? Does it continue the trend following it upward, or does it push through and kind of pick up a sideways channel, which would be represented by the 953 to, let's call it, 875 levels? You could possibly have a channel forming right here. So those are just kind of things that, if you're looking to trade Tesla, I know there are a lot of people who like Tesla, as a stock just because of the run up they had. But that's just, that's continuing analysis. It's been up there for a while. I haven't been playing with the charts or anything. I just kind of looked through this just when Simon was playing his puts, and just kind of some other people were asking different levels to get in at. And it's like, well, that's what I see there. So yeah, and if you look at the buying channels, we are certainly the buy sell channels. We've moved away from those, and that's why I like seeing it closer to my actual average now. And I was looking, if it was going to continue to hold in the mid-20s or below, I was looking to add more to the position, just to help drive that average a little bit lower. But it's catching and holding this upper end, so I might have to build out another level higher up to look, possibly at a position to get out or to start swinging some of the swinging shares around. So if I can start swinging shares in order to, increase my share count, increase my position, y'all know I'll definitely do that. Just checking my work phone here real quick. So what does everyone else have going on? And Ugandan Toad, what is Movember? That has me kind of interested. Because it sounds like something I'm interested in. that's better. So we're going to go into AMC. I kind of want to have a look at the options, see how they're looking for this week. So we are on calls. Not a whole lot of excitement until you get up to the $20 strike price. Up to $20, you know, we're almost up to 14,500 contracts. And if you look, you know, look everything between here and there. At 17, we got close to $6,000. We're at 18's knocking on the door of $5,000. $5,000 almost on 19. Now you got to remember these 50-cent increments. Those will be lagging behind a bit because those haven't been built out as long as all the solid dollar marks. Oh, mustache November. No shaving in November to raise money for charity. Yeah, up here in Minnesota, it's the full beard. Now, granted, the last time I did not have chin hair on my beard was probably well over a decade ago. I've been rocking the goat now for easily, I think, 11 years. Just trim it up, keep it looking nice. I'd like to, you know, get it fuller, grow it out more, get a nice little Viking braid in there. So let's look at, because not this week, but next week we have the monthlies. And monthlies, some people tend to gravitate a little bit more towards. Oh. Yeah, my fiance love the smooth. She loves the smooth. She loves the fuzzy Frank and the non-fuzzy Frank. So, but yeah, I think I'm gonna certainly during the summertime it's nicer not having the full beard. But in the winter it gets nice having that extra face warmth. So yeah, not much on the monthlies. We 20 for the monthlies. The $20 strike price is knocking on the door of 10,000. You know, it can fill out. You know, you can see 5, 6, 7, 8,000. You know, filled out all in between. But I tend to like to see the $5 increments. You know, really stand out. Because as long as they're standing out, they're holding up as those key psychological levels. And a lot of investing in the market is it is psychology. They're playing, the hedge funds are playing the mind games, trying to shake off paper hands, and we're playing the mind games that keep dropping it. We'll keep holding our positions. We're not going to get shook off by this. So it all comes down to the mentality, to the attitude of the community. That's funny, Toad. So I was looking at these last week, and I was indecisive last week, looking at the verticals, looking at a lot of positions, because just not knowing how this week would open up, and looking at how PROG's kind of woken up a bit. AMC's having a little bit more of a pullback. So just kind of seeing where some of these bull puts, and I had mentioned it before, it is nice having all this tighten up, because we're now looking at $50 contracts as opposed to $100 contracts. So you can fine tune your trading strategy just a bit more. And I think it was these $13.50 to $14. These are the ones I was looking at last week, and it looks like that for now they're holding their value. They're holding where they were, even with the share price pulling back and lowering. So basically, as the share price drops, the value of these will go up, but as theta kicks in and time decay goes, the value goes down. So pretty much even with the share price dropping, the theta decay is maintaining a neutral level on these contracts here. So these might actually, I think it was about $12, $13 on Friday that I was looking at there. Do you recommend getting into options? Trading 212 doesn't allow options. However, I found a UK site that does allow it. This is primarily an options channel, so it all comes down to where your risk tolerances are, because options have an expiration date, and I always talk. Part of options is understanding day zero. Day zero being you find the stock you want to play. You find you have an understanding of what your end goal is. What you're looking to do. And day one is where you would actually go in and start looking to enter in your option position. Now, the important thing on day zero is you've got to understand the risk involved. Options have expiration dates. You have to know: are you looking to get in order to, are you looking to capture profits? Are you looking to exercise? Are you looking just to hold to expiration? There's a lot of analysis you have to do in yourself, not just in the stock, in determining whether or not to get into options. Now, this being an options channel, I try to provide the tools for those who have made the decision of, yes, I want to play options. Of course, I don't give out advice, but if the information that's provided here leans towards you making the decision of, yeah, I think I'm ready to play options. Yeah, if you are ready to play options, there is a potential to make money both on the upside and on the downside. And it really comes down to how tolerant, what is your risk tolerance? Do you understand the risk involved? Do you have a trading plan for, if it goes up, I will do this. If it goes down, I will do this. That's I've talked about stop losses, knowing potentially where you want to exit your position to preserve your capital. If the option, if your contracts start to go bad, if the trade goes bad for you, do you have set in stone? Do you know where you're getting out at to preserve your capital, and how much are you willing to lose of the money you put in? So, that's kind of a long explanation, but, if it's within your tolerances and you have an understanding and know how you want to trade them, yeah, I would totally recommend getting into options, because it's a way to make money. It doesn't matter whether the stock's going up, going down, or going sideways. If you understand the risk and if you've got a good trading plan, yeah, I would definitely recommend, because otherwise you're sitting back waiting for the market to do something. Waiting for the MOAS, waiting for this stock to run, waiting for that stock to, waiting for it to play out. Just owning shares, to where if you're playing options, if you have a little bit of capital standing by, you start playing options and you can start generating a little bit extra capital, and that not a play on words, but the more capital you have, the more options it gives you, the more things you can do with that capital, rather than if you're working an 8 to 5 job and you have $200 a month you can invest. Well, if you're playing options and you're savvy and you have a good plan and you stick to it and your analysis is good, well, then you can start adding money to your bankroll that you use for playing options. You can increase, you can generate more revenue off playing options and use that money to make better moves. Bull puts up to 14. That would not be a bad gain. I'm still kicking around the ideas here. I kind of would like, oh, let's get back over AMC on the 1 minute. Yeah, not a problem, Toad. It's we're all just friends, kind of hanging out here, and we're spitballing ideas around. Nobody here that I know of is a financial advisor. But if you're looking for a lawn care advisor, Paul Wright Lawns does have his own channel. Right now, it's mostly snow removal, but he has he does live streaming. He's got videos out there. Just a little shout out to the Paul Bro. So yeah, I am wondering. Just checking over some market positions here. AMC starting to catch a bounce there. PROG looking nice where it's at. Hey, no problem, Paul. That's I have no problem supporting other members of the community, getting a shout out for their channels. Just subscribe to Paul. Paul, you got another subscriber, man. There you go. We are all one community here. So 1340 is the low we punched through to. Hey, DD214, how's it going, man? Welcome to the live stream. No, there's DD214. There's no such thing as late. A bro always arrives just when they're supposed to. To steal from the Hobbit just a bit. Yeah, I am actually seriously looking at it. Oh. Thank you, Weeble. Thank you for the notification. So yeah, looking at these... I'm hemming and hawing here on getting into some bull puts again. I just, I like to, Clay brought up a very interesting point, and I've brought it up here before and everything. There are investors, people who, take their money, lock it into stock, and just, sit on it for the long term. And there are traders, and, I've got part of my portfolio that is dedicated to long-term investment. And then I've got part of my portfolio that likes to be doing the trading, that likes to be actively out there doing stuff. Is open interest the number of open interest is the number of active contracts. So you can see, you can look at if you look at the bull puts, you can see that currently the bull puts at the the $13.50 to $14 mark, there are 4,618 open contracts. Those are contracts that are actually out there right now. So I kind of, let me look at the singles here. Very good question though, Toad. So puts $14, has right about $6,000. Call side of the house. They're really not gaining too much with the downward push for this week on the call side of the house. And I just wonder, I almost wonder if they'd want to hold it right about a 14.50, an equilibrium right in the $15 to $14.50 range. I wonder if they would want to hold that throughout the week, because if they push it down too low, they can put those puts will go in the money. And if you look between these two right here, we're looking at, what's that, 10,500 between those two sets of contracts right there. Those are just the individuals. That's not even counting all the spreads that are out there. Does it matter if open interest is high or low, or is the number instant? No, the number is actually quite. A lot of times, especially when AMC was around the $38 to $40 mark, when it was in the high end, I was playing covered calls quite a bit, and I would actually use those, use the open interest, use the active contracts. I would look, because a lot of times you would see a lot of calls get stacked up at the $45 mark. So I would play my covered calls at the 46, the next level up, because I knew that $45 range would be a battleground come Friday. That is significant of, especially on the call side of the house. Where the share price currently is, if we're on the call side of the house, every contract below that price is in the money, meaning those are contracts that are be paying out. So if it moved up and say hit another, we'll actually jump over to the call side of the house right now. Calls, single. So for every level that it gains, that many more contracts would be in the money, meaning that many more contracts would have value. Everything out of the money would expire worthless. So if it never gets up to this $20 mark by expiration, these almost 14,500 contracts would expire worthless if it never got up to 20. So it's definitely, it shows, where people want the shares to close out the week at. If it runs up and closes above $17 a share, well, these almost 6,000 contracts are now worth something. They close in the money. So that's a lot of where it plays around with where the shares close out. And it flips over the opposite thing when you go on put side of the house. These are where people can put their shares to someone else if they choose to, if you're purchasing. Now, I've stated before, I am a seller of options. I like to collect premiums. I like time to work on my side. As a seller, there are three things a stock's going to do. A stock is going to go up, a stock is going to trade sideways, and a stock is going to go down. As a seller of contracts, 2 out of those 3 things are good for you. As a buyer, you always want it to move towards, your contract. 1 out of 3 is good for you. So I like playing the selling side of the house because it gives me, more opportunity to make money. And I like playing spreads because not only my maximum profit's identified, but so is my maximum loss also. And the maximum loss being the collateral that I put up minus the premium I receive. I'll never lose more than that amount. So is AMC... Okay, AMC is turning around a bit, it looks like. Yeah, a little bit of a downward movement. looking at it, I was out on the 30 minutes. I wanted to look and see. I actually didn't have to go that far. So that 1340 is currently the lowest we've been since the run up last year. So I'm kind of looking. That's why I keep flipping back and forth on the verticals. Because yes, I would get $4 per contract more for the $13.50 to $14 bull puts. But if I step down the next level, the lowest we've gotten since the run up was $13.40. That's 10 cents in that range. So the potential is for, at the end of the contract, I might not make as much instead of turning $10 per contract profit. I may only turn $8 or $9. So the potential, if it dipped down in that range by expiration, I might get out and not capture that full $10 per contract. So just kicking around the numbers and seeing where everything is at and how low am I willing to go safely to secure some profit. And looking at this, if I was going to enter in on these 1350s at $10 premium, I would probably end up setting a stop loss of I'd be collecting $10 per contract. I'd maybe do $15 per contract stop loss on those, just in case it turns south on me. So yeah, I'm just kicking around the idea of entering into some contracts. I wish PROG would hurry up and run up to the levels I'm looking for to sell at, because I would love to be able to have that additional capital to shift over into options contracts, to shift into more bull put spreads. But just with how everything's been since that November push down, a lot more of the contracts I've been entering into have been safer, way further away from the current share prices. Even these, if you're really looking to forget nickel and diming them, if you're looking to just nickel them, forget the dime, you're just willing to take a nickel just to gather a little bit of capital. These $12.50 to $13 at $7 per contract. Well, depending upon how much you have to invest, if you had $500, you could enter into 10 contracts at $70 worth of profit, and you got a pretty nice buffer there. And again, if you're entering into if you're entering into options, identify your risk. Know where your stop loss would be. Just mainly to preserve capital, because there's nothing worse than you get into position and the capital that you have, the money you have invested, slowly bleeds away, and you hold waiting for the turnaround, and you can find yourself holding, and the turnaround never comes, and it just continues to wither away. So today we did duck down. We did not quite get to the 1450 mark. Did not make 14. Yeah, I'm running through the numbers in my head, just trying to figure if those. I think the 14 should be safe. Oh, no problem, Toad. That's we're all here to. We're all in this together, and I just don't want. If somebody's looking to get into options, I just want them to, be able to make the best decision possible. What I'm actually looking for is if I enter into these contracts and it immediately starts turning around on me, because that's been the luck on a couple of them lately. I'll enter it in, and my contracts don't even make the end of the day before my stop loss kicks in. I have. I don't know, we're probably looking at maybe 10, 12 more minutes streaming. Is there something, did you have a direct question or something directly you wanted to go over? Because, yeah, like I said, we got like 10 minutes left. Till you fall asleep. I just can't wait till, I can't wait to see what the future holds and see if we ever reach the point where I can do this for a living. I just kind of be chilling out here and waiting for people to pop in and ask questions, and that'll be nice because potentially, I wouldn't have a problem with going from pre-market all the way until Clay Row stream, and take a break for Clay stream, come back for the midday, take another break for Clay going into Power Hour, and then do a market wrap up afterwards. I'd totally be down with that. Go through each individual column. Okay, well, for the most part, the bid ask, those are just where your buyers and sellers are looking for. Okay, let me go over to the call side of the house. It'll make it easier. Except for the last four. Well, the Greeks are actually a lot of the important ones. Because all the bid ask and last, this is just where the buyers and sellers are, the last place that the buyers and sellers met at, the change in value of the contracts on the day. Midpoint is just it's the midpoint. You've got your bid at $1, your ask at $1, and those change throughout the day. That's just the midpoint between them, how volatile the stock is, and how many contracts are currently open. It's the first part of it is just where the bid and ask is, and that's why a lot of times when I look at it, I just kind of go off where the midpoint is, because it all depends how fast you want to get filled, whether you're buying or selling. It'll be easier to get filled if it's less favorable for you. That's the thing. I always look off the mid, because if my contract goes through, it goes through. If it doesn't, it doesn't. I always try and take the mid ground. I don't have to get filled. And you can just kind of see where the last place that the buyer and seller met at. So if you look, the last contract executed for these 1550s was actually lower than both the bid and the ask. Yeah, that's all these are, is just, that's where people, that's where sellers want to get their money, and buyers only want to pay so much. Okay, so by the $18, so if you were buying calls, and these are calls that are expiring this Friday, which means there's not a whole lot of time to be right. That is one thing, definitely. If you're on the buyer side of the house, time works against you. The further away your contracts are, the more of a chance you have to be right. So it is multiples of 100. Anytime you're dealing in an options contract, you are dealing in a 100-share block. So you were entering a call to buy 100 shares of AMC at $18 per share, and the premium that you have to pay on that, you have to pay 14 cents per share. So it'd be $14 to enter into this contract. Now, important thing because you're saying except for the last four Greek ones. do you have an understanding of the Greeks? Because the Greeks, if you do not understand them, they can eat you alive. It is not even a joke how bad the Greeks can hit you on here. And by that I mean, so you pay $14 per contract. And so the delta is how much the contract changes based on $1 price movement. So if the share price drops by $1, the fact is you paid $14 for this contract. If it drops by $1, this will lose over $13 in value. So if AMC drops down to $13.88 and nothing else changes, this contract will drop down to $1 in value, which means you've lost almost everything on there. Yes, I've seen videos on them, but will be more. Yeah, definitely. Essentially, these are the prices you're looking at, whether you meet on the bid or slap the ask button. It really does come down to where you get your fill at, and you can go in and you can say I want to get filled at 14. You want the bid side of the house. So you're like I want to get filled at 14. So you can put in your contract, and as you can see, 14 is recognized as a midpoint. The last contract that came through, they slapped the ask button, or it might have been a higher value when they did it. So the last fill that was done was at $15 per contract, but you can go in and you could even ask $13 per contract. You can go in and you can ask a lower bid. The problem is if everyone's trading at $14 and $15, your 13 will never come up. Yeah, but certainly understanding the Greeks will tell you how you're going to make your money, and a lot of it can come down to how long of a time period are you looking to hold these. Are you into day trade, or are you thinking it's going to run to expiration? Because remember, the longer you hold, that's where theta kicks in. So this contract is going to lose almost $6 per day, even if the share price doesn't change. So no matter what, if nothing else changes 24 hours from now, instead of this being worth $14, it'll be worth $8 if nothing else changes. That's why you hear a lot, and this has been said several times on Clayro's channel. Make sure you give yourself enough time on these contracts. Because just for giggles, let's go out to 39 days out. So these will be the March monthlies. $18 strike price. So you're paying a lot more. You're paying $128 for this contract, but if you look, you're losing less than $3 a day initially on the contract's opening. All right, let's see. Hang on. What happens if AMC hits $18? Do you sell your contract or wait until AMC hits $30, then buy those shares? Well, see, what happens is at any time, because you are the buyer, you have the right but not the obligation. At any point, you can say, I'm going to buy those 100 shares for $18 a share. So what happens is, if you have those and AMC runs up to $30 a share, like you said, you can go through and buy those shares at $18 per share. And that's if you have the $1,800 available, because you would have to have that money to purchase those shares. So you could go through and you can exercise it to buy those 100 shares at $18 a share, or you can sell that contract to someone else and take the value of it. Now, if you have $18 calls and it runs up to 30, you're going to be, we're going to extrapolate data here. We're not actually going to and see, we can't even get good numbers on here. So let's your $18 contracts. So let's say you bought this. Oh, I'm trying to think of how to. Yeah, I'm trying to think how to actually extrapolate some data for you. As the share price moves up, it will gain value to where, say you bought them for the $14, that could change to where all of a sudden, let's say that you'd bought them a longer time period ago, and it ran up past. So say you bought those contracts, but you bought the $8 contracts, and you paid $14 per share, and it ran up on expiration. It ran up to almost $15. Then you'd be able to turn around those same contracts that you purchased for 14. You'd be able to sell back for almost 700. What can you do with the contract if you don't want to buy those shares? Yeah, you sell the contract. So pretty much anytime there's an options contract, just like with shares themselves, there's a buyer and a seller. Well, you bought to open that position. Same thing as the hedge funds, opening those short positions. All you would do is whatever you did, if you bought to open, you would sell to close, and you'd be selling for the value of the premium. So any one of these, say you bought these contracts, you just use the $12. Say you bought these a week ago, and you bought them, you paid $14 per share. You paid to enter that position. You could now sell to close at $292 per contract. So all it is whatever the price moves to. If you bought to open, you would be selling to close, and you'd be selling at whatever you wanted, whether it's the bid or the ask. You would have that value in place. If the price never hit 18, if it does not expire, if it does not close in the money, meaning above $18, then that is worthless. It expires worthless. You don't collect anything on it. That's why I've spoken before about not being afraid to take profits. If you're up 30-40% and that's enough money for you, go ahead and close out that position and look for the next position to get in. You don't have to hold the expiration. You can exit that position. If you're up and you're like, hey, that's enough profit for me, and you bought those calls, and you look and you bought them for $14 a contract, and that contract's now worth $28 a contract. You can go and sell those back, and you doubled up your money. You don't have to hold. If you hold an expiration and those become, it does not close above that amount, then those are worthless. You've lost the premium that you paid. You lost the $14. That's why, and you might have heard that during Claybor's stream. He says, never be afraid to take profits. And I've said it before on here. No one has ever lost money by taking profits. You may not make as much money, but if you take profits, you will not lose money. And that comes into, the technical analysis. Enter in the contract when it's low, and if it runs up and you're in the green on it, don't be afraid to exit and take that money. But we are getting to that time. Toad, Paul, DD214, I want to thank you all for popping in the live stream, spending a little bit of time with me today. Toad, definitely, if you have more questions, I have... No, calls are for the stock price moving upward. Puts are for the stock price moving downward. Calls and puts are pretty much the inverse. On a call, you want the share price to go up. On a put, you want the share price to go down. But thank you, everyone. If you have more questions, Toad, definitely, if you got like a notebook, write down questions. We can totally do a Q&A for the whole time. I mean, and if there's enough interest, I might start doing some more of these in the aftermarket when the options chain aren't moving around. But yeah, thank you everyone for stopping by, spending a little bit of your day here. And until the next time, I wish all of y'all good trades and good health. And I'll see y'all back over on Clay Bros in a bit.